I think we have a little bit of time left for questions. I know we went a little bit long. Gentleman here in the corner.
Hello, my name is Arnold King. I live in Prince George County, Maryland. I want to thank you guys for having a discussion. This was a great discussion, very educational. But however, I got a question. Don't you guys think that the SHA, CRA, and HUD housing will conflict with each other? I mean, who are the losers? Could it be government? Could it be everybody? And also, what do the individuals in the financial industry, such as the banker, mortgage broker, and others, think about the disaster that we've been into? Cause nobody had did any studies on them. They study how they feel and what happened when they went and deal with piles of innocent piles of application loans and so forth. That's my big concern about it.
I don't know if I can restate it. If you want to
The first question had to do with FHA and whom else?
CRA and HUD.
CRA and HUD. I think, and I can sort of explain some of the myths that John fell into. When I talk about CRA lending and these charts I put up, 85 to 90% of those loans were not high-rate loans. They were not called subprime. They were not put into subprime mortgage-backed securities. That's what they were not, and I admit that. I discovered that, and I have substantiated that. But some of them were FHA loans. I believe about 10 to 15%. I believe upwards of half of them, particularly after 2000 to 2001, when Fannie and Freddie really got ramped up, were CRA loans. And I believe the remainder that didn't go into the subprime securities were held by the banks or sold by the banks, other banks, as CRA loans in their portfolios. I would add that one of the things that was a great business that Countrywide had, which was working with HUD, another one of this alphabet soup, they announced $1 trillion in commitments. They actually fulfilled $780 billion of it. Angelo Mazzillo was honored in 2004 as the Housing Person of the Year by the National Housing Conference because of all the great work he had done originating these loans. These are all of the announcements, there are dozens of them, by the big banks of all of their community lending that they put out in their annual reports as CRA-related lending. All I know is what they said about them. I can't answer, what John said. I just know they called it CRA lending. And that's what they said it was. And WAMU had their community partnerships, turning dreams into reality. We all know about WAMU, and this was their 2006 report. So there's a lot that was going on here with all these alphabet soups, but at the end of the day, it resulted in these trillions and trillions of dollars being lent, much of it to people that ultimately, couldn't afford it. To Bruce's point, FHA has now publicized what their expected default rates are for their 2006, 7, and 8 books, and they're 20% or more is their estimated claim rate. And so I believe ultimately we're going to see claims on these loans, even going back to 2004 and 5 through a good chunk of 2009, that are going to be in the 15 to 20 to 25 to 30% range. And I believe a lot of the CRA lending that I've documented is going to fall into that 15 to 25% range also, which is too much. Under stress is way too much for the system to bear. You can't deal with the winners and losers under that because, as I think Bruce said, the neighborhood effect, which I call a systemic type risk, it's not just a credit card going bad that doesn't affect somebody else. That house going bad into a foreclosure spreads among the other houses like a contagion because it impacts the values of the other homes and it impacts what other people see is going on, and therefore it has a contagion effect.
So I need to answer that because in case you don't know this, because you might have been confused by that last comment and the slideshow, Fannie and Freddie are not covered by CRA. They have affordable housing goals that a regulator is supposed to enforce to see to it that they, don't have this government benefit of this guarantee, an implied guarantee, and that they only go out and compete with the free market or the independent market with this benefit and not do something that's socially beneficial, again, safely and soundly. But they're not covered by CRA. And furthermore, I don't think we need to tell anybody in this audience, if you really look at where these foreclosures are occurring, it's not just in low-income neighborhoods, and it's just not black people and Latino people. It's whites all over the place and all over the suburbs. This was a market-driven fiasco of making loans to people who bit off more than they can chew, who assume when the broker and the lender told them, don't worry, you'll be able to refinance. And as Ed said, the housing prices don't always continue to go up. I agree with that. But that's what people were told. You'd be able to refinance with greater equity in your house, and you don't need to worry. We run a foreclosure prevention program where we help people, and you would be surprised. I had one couple come in, the husband and the wife were both mortgage brokers who were in foreclosure. I mean, you'd be surprised at the educated people, the whiteness of these people who are caught up in this. And it's not CRA. It's just the free market gone wild. Video to come.
I think this is a point worth parsing out, because I know a lot of the discussion has mixed Fannie and Freddie with CRA, and I think it's very important to keep in mind, Freddie and Fannie at the height of the market purchased about 40% of the subprime mortgage-backed securities out there. They were the largest single source of liquidity for the subprime market, but they were not covered by CRA, and I think it's a very legitimate point. I would contrast a little bit. I don't, by any stretch of the imagination, consider Freddie and Fannie artifacts of the free market, but that's my own viewpoint. But I think we've only got time for a couple more questions.
Let me just say this thing about Fannie and Freddie. Yes, they were not lenders, but I can testify to this firsthand. Gales and CATO came into actually they came in, 150 people came into the lobby of Fannie Mae, and David Maxwell called me up in 1986 and said, Ed, there's 150 people in the lobby, go talk to them. And I did, and I said, what do you want? And he said, we want some CRA loans to be bought by Fannie Mae. And I said, okay, fine, let's talk. And we sat down and talked. That was in 1986, and we put together a program. But if you read the legislative history, which is replete.
How did those loans
let me finish. I let you finish without interrupting.
Yeah, sure.
If you read the legislative history, which is replete, and I've got the books here that show it, you will find that the whole purpose of getting the affordable housing requirement into the Fannie and Freddie Act was so that Fannie and Freddie could buy and facilitate the origination and purchase of CRA lending. Not just CRA lending, but that was a large chunk of it. When I say that Fannie and Freddie purchased 50%, I am talking about Fannie and Freddie's own published data that, in particular Fannie's published data that they published in 2003 that said how many CRA loans they were buying. Again, if they lied, I can't answer that. All I can say is what they said, and then when I look at the loans that are actually in their system that they disclose, they are not high interest rate loans. They are not the kind of predatory lending loans that John talks about. What they are the exact same loans. They're fixed rate, they're owner occupants. I'm talking about the high LTV loans. They're owner occupants, they're not neg-am, they're at normal interest rates, they're not Alt-A. They're none of the things that I've admitted CRA, by and large, 90% of it isn't. And so, again, I don't know where we get into this argument, but I'm saying CRA is not that, but Fannie and Freddie's high LTV loans are that.
May I say something, Ed?
Very quickly, because I do want to get an opportunity for
I think Gail Sincata, God rest her soul, died a few years back, so she's not here to defend her position. But I think that if you recall what she asked for, Ed, and what Maxwell consented to or conceded to, that those things are not what caused this problem. In fact, hang on a second, Fannie and Freddie during that period of time was quite profitable, kept moving up the list of Fortune 500 companies, and really throughout the 90s. The biggest increase in minority home ownership loans, originations, occurred in 93 and 94. It was almost 99% of it was prime loans. And those loans performed well. It all changed when we hit the aughts, the 2000s, when we began to see a flood of money, deregulation, and a growth of an industry that were not covered by CRA, that began to, Fannie and Freddie, in 2001, Fannie and Freddie had $2.7 trillion in market share, in assets under their books. $2.7 trillion. By 2003, that had been reduced to $1.7 trillion. because that other non-regulated segment, the Americrest New Centuries Option 1 countrywide, non-regulated really, I mean, you talk to the FTC, they had 2 people to run that whole thing. But you look at that, and it's like Fannie and Freddie finally said, hey, are we going to be relevant to this market? We had better get into this business. And that's when they got into this business of Alt-A, funny money, low doc, purchasing a lot of this market share, which got us all into trouble. But they followed the market. It wasn't them leading the market.
Well, I mean, I think that's a legitimate point. It's certainly worth pointing out that about a fourth of Fannie's business was countrywide alone, and the vintages of the subprime market that have really come back to haunt us are those vintages where Freddie and Fannie were in the market in force. I think we've got time for 2 quick questions. Peter, do you?
What's Peter's last name? Wallace. Yeah.
Thank you.
Sure.
There are 2 narratives here.
Peter.
Hello, John. One is this on?
Yeah, it is.
Yeah. One narrative is that the problem was caused by deregulation, as you said many times, and the mortgage brokers who were trying to make a profit and made these loans to these people who couldn't afford homes, shouldn't have been received these loans. And the other narrative, which I think is somewhat more accurate and is supported by Ed's data, is that it was the government demand for these loans which produced them. You can't actually make a bad loan if no one is going to buy it. And it turned out that there was a buyer for these terrible loans, John.
It sure was.
And we know that that's true if we accept Ed's data, and it looked good to me. 17 million of the 25 million subprime and other bad loans are on the books of Fannie and Freddie, FHA, or on these 4 large banks that made these loans as part of their commitments to Acorn and others to make CRA-type loans. And in fact, the National Community Reinvestment Coalition was proud of this. You published in your 2007 annual report that between 1997 and 2007, $4.5 trillion in CRA loans had been made. So the point I'm trying to make here is that it is not right to argue, it seems to me, based on the numbers that Ed has, it's not right to argue that deregulation or lack of regulation of mortgage brokers was what caused all these terrible mortgages to be made. It sounds to me as though the mortgage brokers and others were doing exactly what anyone would do, and that is if someone appears in your doorway with money and says, I will buy whatever junk you can produce,
Right.
you produce it.
Right.
That's the good old
except
American way.
The government or the community groups never wanted
The point, however, is
loans to be
stop-
made that were unsustainable.
Let me just
But
finish.
that's an important point because your premise falls apart if you understand that. That because someone is inspiring you to try to do more lending to low wealth people, that does not mean that you're allowed to do an abusive, unsustainable loan.
No, and that's
the way to
true,
ensure
but
that doesn't
you're
happen
right,
is
John.
adequate regulation,
You're right, John,
which
but
did not exist for the independent mortgage
right, but
companies.
look at the government policy involved here.
Yes.
They're inconsistent. The government was saying to Fannie Mae and was saying to FHA and it was saying to the banks that were trying to had to make CRA loans, it was saying, we want to see those loans on your books. We want to see them there. And oh yes, by the way, they have to be good loans. Well,
Safe and sound, yeah.
except they had to be flexible also. But the point is
A flexible
that
good loan.
the point is that the government really wasn't saying to the people who were buying these loans at Fannie and Freddie and at CRA and so forth, and at the banks that were required to make these CRA loans, or at FHA, these loans have to be good loans. You have to have 20% down payment or at least 10% down payment. They weren't saying that. They were saying, we want to see the loans. We want to see them flexible, and we want to see them being made. And that puts the responsibility where it really belongs.
I didn't say earlier that might help you understand this. And that is, when a CRA exam is done on a financial institution, a big bank, their assessment of whether you're doing enough CRA loans is compared to your other financial institutions, to your market, to the market needs, and then to what other lenders are doing in that market. So if all the lenders are doing, like, I'll just throw out these figures, 5% of the loans to low and moderate income households, and you're a bank that's doing 1%, then the regulator is supposed to step in and say, we want to see you do more. But never, ever is it do more and forget about whether they're risky or forget about whether they're unsustainable. And whether the regulators did that job, because I don't think it was just the lack of regulation, I think that's particularly true for independent mortgage companies, but whether the regulators who were supposed to regulate it did their job is also, I think, part of the problem. But do not take the law, like a civil rights law, and say, oh, well, folks are supposed to be able to sit at whatever lunch counter they want, and if they can pay for the sandwich, they should be able to go there. Well, some fights have broken out, so it's a bad law, No. The law needs to be enforced according to the letter of the law and the spirit of the law, which is safe and sound lending. You don't help low-income communities and communities of color by putting a lot of crap out there that's unsustainable. In fact, home ownership rates for low-income and minority people are less than what they were before this lending debacle that began really in earnest in 2001. So it didn't help any communities, and communities, the ones that are suffering the most are the low-wealth communities that are losing incredible value. So we're not for any of this. We're for fairness. We're for, particularly institutions that get a government benefit. We now know all these financial institutions get a government benefit, right? I'm with you on that one. We now know they all have the full faith in banking. Well, if you're going to do that, be fair and don't ignore working class blue collar people who are working their way up the economic ladder, because that's in the interest of our capitalist system.
Thank you, Joe. We've gone market. Well, real quick.
I made a comment earlier that I didn't follow through on. I think it's somewhat germane to that. I said when I started in the business in the 70s, the files were thick. When I ended in the business, the files were thick, but they were thick with different things. They were thick in the 70s. They were thick with borrower information. In 2007, they were thick with regulatory stuff. They were just as thick, but it was practically no borrower information, but all kinds of regulatory this and that and sign off and it just got thicker and thicker and thicker.
Well, I'm going to apologize. I know we have a few questions left, but we've gone far over our time.